When it comes to trading, there are a lot of different tools you can use to get to your goal. There's a saying, there's a million ways to make $1 million. And today we're going to be talking about one of those tools that can help you refine your entry and your exit as well. And that tool is Fibonacci. Fibonacci is a mathematical sequence that was invented by Leonardo Fibonacci. And this is a sequence that we see all around us. We see it in nature, we see it in plants, trees, flowers, fruits. We also see it in computer algorithms, which makes sense that we also use it in Forex market as well. In today's video, I'm going to be going over some of the foundational aspects of Fibonacci and how you can apply it to your trading to better refine your entry and your exit so you can have a higher win rate. Let's get right into the video. So when it comes to Fibonacci, right, we're going to be taking a look at the charts here. But before we do that, we're going to be going over a few key aspects before you can apply it to the charts or any currency pair that you will be trading. You can also apply this on every time frame or any time frame. It works the exact same way. The first thing that you want to do is you want to identify who is in control of the market that you're currently trading. And the reason why Fibonacci is important is because, let's say in this example of a buyer's market, right, you want to know where the next level of resistance is going to be, or where the next area of liquidity, as I like to call it, is going to be. What you want to do is you want to identify the highest point of a move and the lowest point of the move. For me, I like to see a full sets of retracement before I start to plot my fib. If you go on TradingView, we have our fib retracement tool, and the basic one will essentially just give you the standard fib, which is pretty good by itself. As we're seeing price trade back down, we have our fib ratios, which are 0.23. We have the 23% retracement. We have the 38% retracement. We have the 50% retracement. We have the 618% retracement. We have the 78% retracement. So what I like to do is, one, I like to pay attention to the 38% retracement or even the 23% retracement. Sometimes I will pay attention to the 50% retracement, but ideally, what you want to do is you want to wait for price to come down into the 38% retracement, the 23% retracement, because guess what, guys? That allows you to get a 3-to-1 in terms of risk to reward ratio. So let me show you what I mean here. So let's say we plot our long position. As the market starts trending lower, you see the market hit the 38% retracement and you get involved right here. You can easily now put your stop loss below the zero. The main extension point for the fib is 1.618. If you get involved at, let's say, the 38% retracement, right, and you get involved here and price moves all the way up here to your target, what that gives you is essentially a 3-to-1 ratio, a 2.9. So you're risking 46 pips to make 133 pips, right? So that's pretty good. That's why the fib is an important tool to use. But if you wait for price to maybe go down a little bit, right, you might be able to get a better risk to reward. You might be able to minimize your risk while still maximizing your reward as well. And in a seller situation, it is the exact same, right? So you essentially just reverse the same scenario. You take your price swing from the lowest point, right, to the highest point when you are using the Fibonacci tool, especially if you're using it in TradingView, and you wait for price movement to get to an area of interest. What I like to do as well is I like to factor in support and resistance. So if we have an area of support or resistance, like we do in this case, which is a past support level becoming future resistance at a key level, we know that, hey, this is going to be an area of interest for price. There's likely going to be a price rejection. So you essentially just put in your trade order and move and watch price go over to your take profit. So let's take a look at some live examples. Okay, so we're taking a look at some real-time examples on GJ 15-minute time frame. One of the important aspects of using the fibs is you want to identify who is in control of the market, which I talked a little bit about. And in this example, we see that buyers are currently in control as price is making higher highs and higher lows. And this is one of the latest move to the upside. So you as a trader now, you want to know, okay, where is the next area of interest going to be? Where can I get in that will allow me to get a decent risk to reward and also get in on the next price swing? I got you. So now what you want to do is we've identified this high as being the main high, and this is going to be the lowest point. You can use the wicks or you can use the body of the candlestick. The body of the candlestick is a little bit more conservative and can actually help in terms of creating more precision in terms of where price is going. So we're going to use the body. We start from the lowest point and we move over to the highest point, or we can start from the highest point and move over to the lowest point. Ideally, you just want to get your extension in the direction of the overall trend, which would be the 1.618 extension, right? So now we see that price is moving lower. We are now getting a nice, beautiful retracement. So another thing you can use for confluence is your support level or your resistance level. In this case, we're going to be paying attention to support levels that price will likely be rejecting from. We're going to go over here and see where price is going to hit. So we're seeing the market move down, and now we are currently getting a nice, beautiful rejection. We've seen our beautiful rejection. So you as a trader can start to say, let's get our our orders in place. Excuse me. So we can go. You can do 35 pips from where price is rejected, or if you want to be a little bit more conservative in terms of your risk, you can go in with a smaller position and open your risk up and put your risk at the 0 level, just below this low. So that's ideally what you want to do. That's the safest place to do it. But if you're adding other tools like strong support level like we have here, you can be a little bit more confident in terms of your risk and do either a 35 or either a 40 pip stop and try to see if price will give you a much larger risk. So right now we have a 4-to-1 risk to reward if we are going for the 1.618. So let's see how price reacts at this level. So we can also plot our, I guess I should probably buy at this level. There you go, just to give you a little bit more of a feeling of, of what it is. So there we go. Now we have our orders in, and we've seen price move very well. So we traded back into our level again, and now we're moving confidently away from it. Beautiful. So we got a nice bounce. We traded above the high, making a new high. And now as a trader, you can either decide to take profit here or let price move all the way up to see if you're going to be getting your full price swing. Personally, for me, I like to take profit as the market is moving in my favor. I'll likely take profit at this high because I know this is an area of resistance and the market could likely drop afterwards. So that's how I would use my fib. One of my personalized things that I like to do with my fibs is I like to add a different price swing to it. So I like to take out the noise. So let's go over here and I'll show you. So favorite template, these are the templates that I use. And what this does is it takes out all the other noise and essentially just gives me the 38% retracement and the 23 and the 50%. And in addition to that, it also gives me the 1.27% extension, right? And that is the first area of target for me. And then you can use the 1.6 as your next area of target, because as a trader, nothing is certain. when the market gives you profit, you want to make sure that you take something off the table as you go. Otherwise, you could lose your entire position. But let's see what price continues to do if the market does continue to move up to the, yeah, there you go. So we hit our overall take profit at the 1.618. Let's take a look at some sellers example very quickly. The main thing that I said in the buyers example is you want to figure out who is in control of the market. And right now we know that sellers are in control as prices making lower lows and lower highs. When it comes to using your fibs, you want to use your fibs with other confluence as well, like support and resistance, because it creates a more powerful tool. So right now in this example, we have areas of interest where price is bounced off. Where price currently is right now would be, right here. We can be a little bit more, add some more areas as well, like this level, because we have a full swing from here down to here. So when we plot our fibs of the candlestick, we want price to come to at least 38% retracement. Right? You want to wait for price to come up to 38% retracement in order for you to get involved in the trade. Right now, we're using the replay mode. So if we press here, we can see as we start to anticipate, what's happening, and boom. Okay, so now the market has hit our area of interest. You can wait for maybe one more candlestick to see if the market is going to give you the rejection, or wait for bearish momentum. Some traders, that's the one thing when it comes to using fibs, you can either get involved as price hits the level, but what I like to do sometimes is I like to wait for a change in momentum, because that gives me more confident that price is going to be moving in the opposite direction. But what the downside to that is, it means that I also lose out on premium price, because if I get involved here, I get involved closer and I'm able to put my risk at a pretty decent level. Let's say we get involved right here. We put our order in place and our stop loss is, or even 40 pips is not bad at all, depending on what your stop loss is. I like to do 30 to 35 pips, but ideally you always want to place your stop loss at the high. But if you're working on a higher time frame, you might want to manage your stop loss accordingly. So we can put our sell order in place right here and see what the market decides to do. So beautiful. Okay, so now we have two extensions like I talked about here. I like to use because it gives me another area where I can take profit rather than just waiting for the 1.618 to take profit. So right now we see the trade and we see how we're in profit. We can take some profit from here, or we can continue to wait to see if the market is going to hit our main objective. And I think there you go. So beautiful. That is a seller's example. That is how you can use the fibs. It's also important to note that you are going to get sideways movement as well. Like the fibs, when you are trading a consolidation, or maybe you're trading a currency pair that moves into a consolidation, you might not want to use it in a consolidation market, because it's not going to give you the best result or the best outcome, because price is essentially going up or down. It's better to use it in conditions where price is moving in a trending or in an obvious trending environment. So using the fibs can help you in terms of your confidence and your entry points and your take profit, because a lot of traders don't know where to enter your trade or where to exit your trade. And if you're one of those traders, this video is definitely one that you should pay attention to, and you should try to backtest, because it will definitely give you a better understanding of market structure, how you as a trader can, refine your entry points and your exit points as well. Hope you found this video insightful. Once again, don't forget to leave a comment down below if you have any questions, if you have any suggestions, if you like it, if you don't like it. Until next time, once again, I hope you guys are out there living free.